With Canada officially legalizing marijuana later this week, there's been a lot of focus on the Canadian cannabis companies that stand to do very well for themselves. But this story is about more than just Canada. Here in the U.S., we've seen legalization pass in state after state. These days, nobody even bats an eyelash at medicinal marijuana. I think legalization at the federal level may happen sooner than many people expect. Which brings me to MedMen Enterprises, a grower and retailer of marijuana that operates in California, Nevada, and New York. These guys have realized that there's a market for a high-end marijuana experience. They have a gorgeous showroom on Fifth Avenue in Midtown Manhattan, although you do need a note from a doctor to shop there. MedMen's trying to make cannabis classy, and it's working in California, where they have a full state-level legalization. MedMen's sales per square foot exceed those of the Apple Store. These guys want to be known as the Apple Store of weed, but they may be selling themselves short. That said, MedMen stock has soared since it started trading in Canada earlier this year, and even with the big acquisition of PharmaCann, the company announced last week, which led them to expand into Illinois, Maryland, and Massachusetts, I think it may be too hot to own. But I like you to know these companies, the stories we're following. Last week, I got a chance to check in with Adam Bierman. He's the co-founder and CEO of MedMen. MedMen Enterprises, full name. Take a look. Adam, huge deal, stock for stock. Tell us what it means for MedMen, particularly the fact that now you're much bigger than you were when you were on last time.
Well, look, it's a blockbuster deal. We couldn't be more excited about it. But I think it's important to understand how we look at everything, right? We look at everything from three buckets. We have the business that we're building, which is MedMen. We have the industry that we're building, which is cannabis. And then we have an asset class that we're building. And on the asset class, we're trying to build an asset class in cannabis that's investable and accessible for retail investors all the way up to big institutions. And I think when you talk about this deal,
they're buying PharmaCann.
Buying PharmaCann for about $685 million. I think this deal moves the needle significantly in all three of those buckets. So we couldn't be more excited.
Okay, so what states will you be in after the deal closed versus where you are now?
12 states total at the end of this deal, 66 licensed retail stores, 13 factories. And you know what's really great about this deal is we've been really focused on California, Nevada, and New York from the outset, 8 years. Those are the markets where brands will be built. And as we look into expanding our footprint, the markets PharmaCann is in are the exact markets we were targeting. And so what this allowed us to do is leapfrog that next stage of our growth, so we can just hunker down and focus on execution.
Which are the best markets to be in this country?
California, Nevada, and New York.
Okay, and why talk about California? Because it's a big economy, so therefore it's big for MedMen.
Well, it is. I mean, Cowen's latest projections are it's an $11 billion cannabis market. Okay. That in and of itself should say it all. But, look, California is where brands are built, where trends are made, right? California exports its culture, its politics. California exports everything all over the world. And so for that also to be married to an $11 billion opportunity, for it to be our backyard, that has been our focus. I think we were really proud at the end of Q2. We represented 6% of all the sales in the state of California, with only half of the retail stores that we plan to open having been open. Okay,
so Adam, when you buy an acquisition from PharmaCann, you're getting to be a bigger and bigger retailer. I know you're soup to nuts, but will you start reporting same-store sales so we have an idea how each store's doing?
We will, absolutely. Yes, we have our first earnings call coming up. Maybe you'll call in.
I will definitely call it.
Great.
And you feel confident that the trajectory is still very strong?
It is really strong. I mean, and it's the unique, aspect of this entire industry. Retail is, the place to be because of the defensibility due to the zoning restrictions and the limited number of licenses. And so, yeah, retail isn't going anywhere. I think retail is the permanent moat opportunity for this industry, and, that's where we'll continue to be focused.
Why does it take so long between when a state votes to have cannabis legal, and then you start seeing dispensaries? What's the holdup? Is there regional battles? Are there mayors who can stop it? School boards? Because it always seems like, well, they just voted, it's big, but they don't just turn on a switch.
Yeah, progress takes time. Right, and I think what
there's enemies, though.
I think what you've seen, over the time that we've been in this industry is that gap between let's go to it actually working is, decreasing exponentially, right? And so, but look, I wouldn't expect anything to be overnight. That's just not how our country works.
All right. Well, speaking of overnight, I have to believe then that maybe we should try to temper the optimism by all the people who are trying to buy Canadian pot companies ahead of October 17th. That may not be such a wise strategy. Why not take a longer-term view and not buy ahead of that? Because there'll be October 18th, October 20th. I mean, it may not be the be-all and end-all day.
Well, as we were talking before we started this, right? I'm not focused on anything short term, and I don't think that as the CEO of this company, that would be good form, right? We look at everything in regards to, 4 real categories, and for us, it's team and infrastructure, it's assets, it's balance sheet, and it's investability. And as long as we're focused on those 4 things, 2 years, 5 years, 10 years down the road, we know we'll be in the spot we need to be in. I know there are a lot of traders out there, and you're talking about buying things ahead and front running and this and that. We don't focus. We don't get involved with that. Look, the U.S. market is where it's at. This is a $75-100+ billion opportunity. We're in the really early innings, and what's really awesome is we're a part of this. We're watching the birth of an industry, right?
And that's why we've been focused on. Last question. I ask everybody in this industry. Size of the markets that are disrupted globally by cannabis. What do you think?
You would know better than me. All I know is that, cannabis and the legalization of cannabis makes the world a safer, healthier, happier place. And as a result, I think you'll have people, replacing other things that they use to make themselves feel better and make themselves and allow themselves to live a better life. They'll replace that with cannabis over time.
Well, I certainly agree with you. Okay, that's Adam Bierman, CEO of MedMen, which just got much, much bigger and could be a dominant force in retail in the United States. Mad Money's back in the room. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.